Great. Thank you, Carl. Thanks for the great introduction, and thank you for all your help.
You're welcome.
1 second. So I just want to give an overview of what we're going to do here. So the best way to think about the next hour is to think of it as a master class, but in a conversational format. Our starting point will be John and Tyler's book of tips from Warren Buffett, with a focus on offering practical advice from Buffett's insights. We will discuss Buffett's playbook on life and investing, Buffett in the news this week, and WWBD, what would Buffett do? We are interested in all of the Zoom participants to join in the discussion through the chat function with questions. And then also we're going to have a couple of poll questions that we'd like you to respond to. So again, I just want to thank the Bookworm for coordinating this, and again, Carl for helping to plan and coordinate this whole activity, including the ability for you all to order a book and get it an autographed version, which I think is a great service. So just really quickly, Carl mentioned my background. I have a media and marketing background. I was founder of Fox News, had worked at CBS, and most recently a private investor and involved in a number of nonprofits to support. I've known John for 10 plus years, and I can say this, he's one of the smartest investment professionals and professors that I've met. I was lucky, I went to MIT, I studied under great professors. You're really gonna enjoy the next hour. And my involvement in this event is based on something that John and I are doing. We're interested in creating a nonprofit initiative to educate people on investment and financial literacy. And it's called the Investor Collective. So as I mentioned, I went to MIT and I was lectured that in marketing, you always underpromise and overdeliver. I can say this, I don't think you'll be disappointed with John. Carl's already mentioned his impressive background. If you want, you should search the Google or any browser to see his thoughtful videos and news, including his audio lecture series on the art of investing, lessons from the greatest traders. John is a top professional with 25 plus years of experience, though he's low key and humble. He's truly one of the smartest people that I have known in my life. So I've given up Sunday. It's a great day in New York, but I'm really looking forward to this discussion, and I think you're all going to enjoy it. The good part is he's going to lecture, but there's no midterm or final. And then I want to introduce you to Tyler. He's a teenage prodigy. He's more like as I've gotten to know him, he's more like an MBA graduate than a high schooler. But I think he proves the product of being from an exceptional genetics and environment. So again, I'm glad that you all joined us, and we're going to begin to the program. So I have a first question for John and Tyler, and maybe John can start it off, is like, if you could explain the why, and maybe give a little bit of an elevator pitch about why the book is important and why you wrote it.
Sure. Well, yeah, thanks, Mark, for doing this. I really appreciate it. We go back a long time and look forward to working together with you in the future, and as well to Carl and the Bookworm. So the book really is kind of a confluence of a number of events. Some people don't know this, but for decades, Warren Buffett met with college students about 8 times a year on a Friday afternoon. I took 4 trips out there with Rutgers students to see him, and was really impressed with not only his financial skills, but a lot of things he had to say on life. So that was one thing that I think sowed some seeds for writing the book. As you mentioned, I teach at primarily 2 universities, Rutgers, and then there's a global MBA program that's a joint venture of Columbia London Business School and Hong Kong University. So I teach value investing among other classes, and that's kind of what Buffett specializes in. Obviously, as an investor, I follow Buffett closely. And then the last thing that kind of put the book together is that Tyler, who you'll be hearing from in a few moments, is a teenager, and that's typically the age when people start learning about financial literacy concepts. And not only was he learning, but he had enough skill, I think, to make meaningful contributions to the book, which he did. So for example, he's taken coursework in financial literacy, he's taken AP economics, AP statistics, And, we can chat about this as we move along today, but he has a little investment portfolio as well. So he was able to make some meaningful contributions. So that's kind of how the book came about. In terms of, why read the book, why it's important. Well, I think the one sentence summary is there are a lot of books out there on Warren Buffett, and there's a lot of books out there on financial literacy, but I think this is the only book that teaches somebody how to be financially literate using the framework of Warren Buffett, who's the most successful investor ever. So those are my thoughts. I'll just pass it to Tyler for his thoughts on kind of working on the book and anything that he learned or anything you want to add.
I would say one of the main reasons why I was interested in being involved in writing something like this is just to learn about a lot of the most important concepts of like finance and accounting, such as how to value a company, how to understand a company's financial statements, or how to interpret accounting ratios.
That's good. All right, so now we're going to focus for a couple of minutes on what the Buffett legacy. So I'm sure many of you know about Warren Buffett, but we want to just explore his legacy, and John will be able to give some context. So he's one of the richest people in the world. And maybe John, maybe this is the list of top people. It's as of May, so it's from Bloomberg. Maybe if you could explain how he places and just some unique aspects.
Yeah, this is obviously a fascinating list, but what's also, I think, fascinating is what is not on the list. So we see Buffett here at like $110 billion, but what you don't see here is that he's given $40 to $50 billion to the Gates Foundation. And, charity is one of the big things that he's focused on. Not only that, Buffett has paid himself a salary, or his company, Berkshire Hathaway, of only $100,000 a year for many years. In his early years, in his 20s and 30s, he ran a hedge fund, which is a special type of investment partnership where you can make a lot of money. And make a long story short, Buffett, if he wanted to run a hedge fund, he'd be worth $400 billion. So, at the top of the list, just to go down the list, Jeff Bezos is the founder of Amazon. Bernard Arnault is, you're probably familiar with the luxury firm Louis Vuitton. Elon Musk, of course, SpaceX, as well as Tesla, Bill Gates, and Microsoft. And I can go on, but Buffett is firmly in there. There's been times that he ranked number one, but as I said, if he wanted to, he'd be double the people on his list if he just ran a hedge fund and paid himself the normal hedge fund fees.
That's great. And so another way to look at his legacy is he's been a crossover celebrity. He was well known as a business person, and then he's crossed over to be a mainstream celebrity. Maybe John, some insights in that.
Yeah, I don't know if you have the next slide to advance that, but happy to.
Do you see it?
I'm still seeing the billionaire list, but I can.
Really? That's strange. All right.
Yeah.
Oh, it paused here. Wait.
Okay, now we can see it.
Yeah, so here, sorry, let me just go back one. Here.
Yeah.
All right, so here,
There.
this is the crossover celebrity site. Sorry for that technical difficulty.
Yeah, no problem. I think there's a lot of things that resonate with Buffett and the general public. One, he's like a regular guy. Yeah, he's one of the richest people on earth, but in terms of how he lives, having a hamburger and cherry Coke most days, driving to McDonald's. So that I think is point number one, that he's a real, genuine person. He seems like your uncle or your grandfather, whatever age you are. Another thing that I think is interesting is that he's made his fortune where the bookworm is, in Omaha, far away from Wall Street, largely working by himself. Yes, he does head a large company, but most of the time he spends about 6 hours a day just reading in his office, reading newspapers, reports, other things tied to his business. But he's done it largely on his own. He's done it in an ethical manner, which I think is important as well. And I think he's having a good time. I think he is truly one of the happiest people on earth, which, you see the subtitle of the book, Financial Literacy and Life. And I think a lot of the life lessons were things that kind of surprised me as I met him and as I did the research on the book. So I think all the above has made him one of these rare businessmen or businesswomen that are known widely in just the public venue.
That's great. And this kind of sums up what I think, and there could be other things you might want to add in terms of he is the wealthiest and most respected person in the world. And like I say, I was surprised. I mean, I think I knew about him, but just what he did financially, but also what he's been done on a charity base, and just what he is as a human being is just so impressive. He really is.
Even on just one of these bullet points, you can have a very impressive, lifetime book. So, we mentioned his philanthropy. So he's basically, in case you're not familiar with this, he's giving away more than 99% of his wealth to charity, the bulk of it to the Gates Foundation, but he also has some children that are running foundations. So number one, he's going to be remembered as a philanthropist. You can see at the bottom of the screen here, there's a screen capture from a website that you might want to check out called givingpledge.org, where Buffett and Bill Gates basically got a bunch of billionaires to pledge at least half of their net worth to charity within their lifetimes or shortly thereafter. So he'll go down as one of the most famous philanthropists in history, kind of like John D. Rockefeller or Carnegie. I mentioned his teaching. For decades, he spent a whole afternoon, and he didn't have to do this, doing a 2-hour Q&A and then having a lunch with students from many countries, originally in the US, but around the world. And he considers himself a teacher. He learned a lot from his father and Benjamin Graham, a pioneer in value investing. We can chat about that more. He's a thought leader. And I think another reason why he's so popular is that his thoughts are common sense, but powerful. He doesn't get caught up in too much esoteric math or things of that nature. Berkshire, the company that he's built, is one of the largest companies in the world, one of the most profitable companies in the world. And if you know the history of Berkshire, they started out as a struggling textile maker, somebody that's making shirts kind of like Tyler and I are wearing. And clearly what most people know him for is probably the greatest investor of all time. There have been people that have outperformed him over short periods of time, but the more money you have, the harder it is to outperform. And we saw that on all the people on that net worth list, Buffett was the only one that is an investor.
That's great. So now we're going to do a quick poll because we're interested in what you all think. So again, Warren Buffett's current net worth is 100+ billion. If everybody could, I guess, text what they feel is the estimated value of his Omaha home. Is it between 500 and a million and 2 million, 2 to 3 million, or 3 million or more? So if everybody could just in the next minute or two, just text what their feeling is.
Just seeing the numbers roll in.
I think I have to have Tyler help me with this.
Yeah, we're seeing a mix here. There's nothing across the board. We have 1 or 2 people that are going with a high number, but almost everyone's in the A to B range. So with that little summary, Mark, feel free to.
Yeah, so let's go. We'll go forward here. So just as context, whether you're in Omaha or you're not, where Mr. Buffett lives is about 4.3 miles from the Bookworm. It takes about 11 minutes. And what's interesting at the bottom is just Buffett's view of kind of possessions in the home. And maybe John, maybe you could give some flavor to that.
Yeah, so let me first just chat about how amazing it is he lives on the same street where he works, right? So that's like a number one lesson, kind of minimize your commute. I know kind of with the whole pandemic, people are working from home, but that's going to kind of go away. So kind of simplifying your life, and you can see a little picture of his house there. But so I don't know if you want to go back to the prior slide, Mark, but so number one, just kind of try to simplify your life. And, we'll reveal how expensive his house is in a moment, but it's not too extravagant. And I do think, even though I'm a big fan of stocks, I do think everybody should own their own home as quickly as you can. Buffett regards it as a place of having great memories, as well as kind of like reducing stress. If you own your home, or at least have a down payment on it, you kind of feel safe during turmoil times like we have been in recently. But he also gives some advice that, a lot of times we see these things on TV, flip or flop, or you see these really beautiful homes. And Buffett says, well, you should have a home that fits your income. You can aspire to, a mansion or whatever house you want, but you want to have the income to support that house. And the last quote here, I think, is really important as well. A vast collection of possessions often ends up possessing its owners. And he basically said, I can have 10 houses, but I'd spend a lot of time worrying about the houses, trying to maintain them, and not to mention he wouldn't be there most of the time. So I think we can take a lesson on having a happy home and making real estate a big part of your life, but not overwhelming it.
That's great. And then this is a photo of his home. And I think, John, you've been there at one point, or you visited?
Yeah. So when I went to see Buffett with the students, and I've also been out to the shareholder meeting, which, by the way, if anyone's interested, you can just buy one share of B class, right? So for those that aren't familiar with Buffett and his stock, Berkshire Hathaway, there are two classes. The original class is called A share, and that one is between $300,000 and $400,000. So that's a little out of the price range of many people. But there's what's called B shares, and that one is less than a few $100s. So you can buy one share and then get a ticket to the annual shareholder meeting, which he calls Woodstock for capitalists. And I've been there. It's fun, other than having to get up early because it's general admission and kind of like a basketball arena. There's a number of vendors there, like you get like a free Dairy Queen ice cream. And Buffett, when he was younger, had a newspaper route and estimates he threw 500,000 newspapers. So there's a little thing where you can throw a newspaper, and if you get it on the porch, you get a free prize. And there are other, stores there like the Bookworm. And so I think it's an amazing time, a lot of fun people there as well. So I encourage you to do that. But yeah, this is his house. And the fence is a fairly new addition. He's had more security there lately. But this is his original home. And you can see here, the total home is 6,500 square foot. But there, what you can't see in the picture is that on my left, your left probably at the screen, there's an addition to the house. So he moved here in 1958. And I don't know when he put the addition, let's say he put it 20, 30 years ago, but this house, at least the basic portion of the house, is probably similar to the house that many of us are doing this webinar from. So, and you can see his quote, he's happy there. If he thought he'd be happier somewhere else, he'd move, but he's had great times there. It's a nice looking house. And it's close to work and his friends.
That's great. And then we went on Zillow to see the value of the house, and it's right now, because of the pandemic, at about 1.4, but I think up until like maybe a year ago it was like about $1 million or less. And it just shows the kind of person he is, and he really is focused on things beyond just material things. So now now that we've given you the background, we want to share some of his insights in terms of understanding life. And we want to just show you, there was a great documentary that was done by HBO a couple of years ago called Becoming Warren Buffett. And I'm just going to share a moment with you of it.
You may have to exit the slide share and then.
Do you see it?
I just see the slideshow still.
Okay, I'll do it again. Sorry. Give me 1 second. Sorry about that. Hold on 1 second.
No problem. Worst case, I can try to show it on my.
Yeah, hold on. Give me half a second. Yeah, I think you see it now?
I think we can see it. Yep.
Yeah, great. It's work.
Girl, so we'll talk about cars. But let's just imagine that when we finish, I'm going to let each one of you pick out the car of your choice. Sounds good, doesn't it? Pick it out, any color, you name it. It'll be tied up with a bow, and it'll be at your house tomorrow. And you say, well, what's the catch? And the catch is, that it's the only car you're going to get in your lifetime. Now, what are you going to do knowing that that's the only car you're ever going to have and you love that car? You're going to take care of it like you cannot believe. Now, what I'd like to suggest, you're not going to get only one car in your lifetime, but you're going to get one body and one mind, and that's all you're going to get. And that body and mind feels terrific now, but it has to last you a lifetime. I'm on the way to the office. It's all of a 5-minute drive.
So I'll be 1 second. I'm just going to change back to.
It's fun, while you're getting that settled. He has a nice car. It's a Cadillac DTS, but it's not a Rolls Royce or anything. And as you saw in the clip, he's living only five minutes from the office, and he stops off at McDonald's and gets his breakfast. And you can tell he's happy. There's a book that was written by Carol Loomis called Tap Dancing. And you can see here he kind of bounds out of the house. It's funny, somebody, when I was there, one of the trips, they said, "What's your favorite place to go?" And you'd think maybe he'd say London or Paris or some exotic place, but he said to the office. So he'd rather be at work than on some kind of vacation.
That's great. So again, the video excerpt is from a fabulous documentary that, if you have a chance, it's on HBO Max, and it's really complimentary to what John and Tyler have written about tips, and it's a very well done book, or rather movie. So if we could just spend some time, we're going to focus on understanding life and then investing. And we put up some of the teachings or insights that are from John and Tyler's book. And maybe, John, you could speak to this.
Well, probably maybe have Tyler start, and then I'll jump in.
Okay.
He might prefer some over the other. So what do you think is interesting here? What speaks to you?
One of these points that resonates with me, I guess, is the second one is pretty important. The more you learn, the more you earn. And one reason why I became involved in writing this book is just to learn more about finance. And I think learning has given me a really good foundation to begin investing now that I understand some of the important principles.
Great. And he's done pretty well with his little stock account, which I think learning by doing is an important takeaway for anyone with teens or people with kids of any age. So let me just kind of address some of these life bullet points. So another one of the questions the students asked him is, what's the most important non-financial skill? And he clearly said communication skills. So just if you're not familiar with his background, Buffett has a master's degree from Columbia University. He initially attended the Wharton School at the University of Pennsylvania, and he left after a couple of years because he wanted to focus on his businesses in Omaha. So he finished his undergraduate work at the University of Nebraska. So despite attending these 3 great schools, the only kind of diploma he has on his wall is from a communications seminar by Dale Carnegie. You probably heard of Dale Carnegie. He existed a while ago, but he wrote a book called How to Win Friends and Influence People. And they basically teach you how to communicate. And Buffett describes his younger self as kind of a basket case, being socially awkward. And what's amazing is that Buffett forced himself to enhance his communication skills. Not only did he take the Dale Carnegie course, and a lot of people can take courses, but when he came back to Omaha, he forced himself to teach an investments class at the University of Omaha at night. And that forced him to speak in public and he taught that course for over a decade. So it wasn't just a one-time thing. So, communication skills are important. And he has a lot of funny jokes. Buffett is also known for his humor. He says, you can be really smart, but if you can't communicate, it's like liking a girl and winking at her in the dark, right? Nothing's going to happen if nobody can see anything. So I think that was, one thing that resonated, communication skills. We can clearly see that he loves what he does for a living. He's 90 years old. God bless him, still driving to work, enjoying what he does, enjoying the people that he works with. And another thing that he's known for is this thing called an inner scorecard. It's basically, do you really care so much about what other people think about you, or do you follow your own kind of judgment and intuition? And there's a lot of examples about it, but we've all heard the expression keeping up with the Joneses or Kardashians, that you're often see what your neighbor or friend is doing, you feel jealous, you feel you have to match that lifestyle. And he basically kind of marches to the beat of his own drummer, that as long as he feels what he's doing is right, he'll kind of stick to that. So he calls that an inner scorecard. And then, some advice on ethics. You can see the second to last bullet: takes 20 years to build a reputation, 5 minutes to ruin it. And that kind of just suggests think twice about doing something, especially, regarding others, something that can have important consequences. And how he kind of describes it to his employees. And there's about 300,000 employees, amazingly, at Berkshire, even though there's only 25 in his corporate headquarters. He said, imagine it as if your actions would be on the front page of your local newspaper, or today it might be Facebook or Snapchat or whatever social media platform you like. So I think that is also a good little tip for life.
That's great. And then now we're going to move into the investment side. And maybe John or Tyler just kind of talk on the context of this, and if there's something else that wasn't included on this list that you might want to share with the group.
Tyler, what do you think?
Yeah, I think the third point is pretty meaningful. A low-cost fund is the most sensible equity investment for the great majority of investors. And that's because just a basic index fund or a similar asset it allows investors to take advantage of the compound returns of the stock market without having to worry about all of the volatility. This type of asset gets rid of a lot of that.
Yeah, just to kind of pick up on that, like the first one says, the most important thing for an investor is to have the right temperament. It's kind of like the mindset or your personality, not intellect. So one mistake that a lot of investors make is that they chase what has been hot. And we could chat about Bitcoin and some of the volatility later. So number one, chasing a hot investment that often will cool off. But the second thing people do is when it inevitably cools off, they panic and they sell near the bottom. So that would compound the mistake. So having the right mindset, I think, is important for being a successful investor. For most of us on the call, I think having a long-term horizon is what you want to do, although there's some very successful short-term investors. The second one is kind of surprising as well, but I think it's very appropriate in the environment we're in right now. So most of the people on the call probably know what a bond is. It's kind of a financial security that pays interest. And then you also get back what's called the principal or face value, which maybe you put up front. And yes, bonds are steady. In most cases, bonds deliver a positive return, but you've got to consider the net return. So net return includes taxes and it includes inflation. So let's look at an example. Today, the 10-year US Treasury note is yielding around let's call it 6 or 1.7%. But the last reading on the inflation index, the consumer price index, was 4.2%. So putting your money in cash and bonds, you're actually decreasing your relative net worth, especially considering inflation into account. So that is kind of surprising that I think many people don't realize that, but you need to have the stomach to handle the volatility in stocks. And we talked about the value of a home. If you're renting, it makes sense sometimes if you're renting, if you're just going to live there for a short period of time. But if you believe that you're going to live in a certain area for a long period of time, you're basically throwing money away to your landlord, he or she paying rent. While conversely, if you own your own home, every time you pay your mortgage, you're building up a little bit equity in your home. So I think a lot of good investment advice here that people should follow. And as Tyler said, if you don't really follow the stock market closely, that's okay. You can invest in an index fund and just buy and hold and invest a little at a time, called dollar cost averaging.
That's great. We're now going to use kind of these insights with a couple of practical questions here. Well, actually, we're going to do this quote here. So this is his most famous quote about balancing fear and greed. So maybe John, if you could briefly talk to this.
It's simple but brilliant. So be fearful when others are greedy and greedy when others are fearful. But it's really hard to do that, right? You're going against the crowd. Most people like to do what everyone else is doing. So I think there's a lot of wisdom in here. And on the next slide, we'll kind of give you a visual of why it works. So both Buffett myself and even his mentor, Benjamin Graham, kind of use this market as a pendulum analogy. In the long run, which maybe we'll describe as 3 to 5 years, prices might eventually reflect the profits of the business, the cash flows. But in the short run, there could be extremes on the upside, which I think we're closer to that area now. And then on the downside, about a year ago when COVID first started hitting here in America in earnest, stocks fell about 30% in a few weeks. So what he says is really you want to buy when people are panicking on the left part of the pendulum, and you want to look to trim, at least, maybe not sell everything, but trim a little bit when things are towards the right side of the pendulum. And you might say, how do I know where we are in the pendulum? Well, there are some valuation metrics. Tyler alluded to that one of the things that he learned by working on the book is how to do some basic valuation. Valuation is the process of estimating the price of a stock or a bond or even a private business. And the problem, though, is it takes a strong stomach to do this. And I think this is one of the reasons for Buffett's success. So I guess just one, practical takeaway for people on the call, the next time you see us in a bear market down 20, 30%, that actually might be a time to add to your equity portfolio rather than subtract. And think about all the things that the financial markets have been through in the past 100+ years. We've had World War I and II, the Great Depression, Cuban Missile Crisis, crash of '87, COVID, 9/11, and yet here we are, the stock market is within a few percent of its all-time high. So the market tends to be resilient, tends to bounce back, and I think that's a good long-term lesson for any investor, not to panic and in fact, maybe take advantage of the panic and make some extra money.
Where do you think we are now in this pendulum?
Yeah, if I had to guess, I'd probably say towards the 4 area.
Yeah.
The problem is that there are really no very other attractive places to put your money other than, like stock. So think about all the risky assets out there. Like I said, we can chat about Bitcoin, but real estate's gone up a lot. That's near an all-time high. The stock market's near an all-time high. You may have been reading about various collectibles, including NFTs, which are kind of a digital collectible. So the problem is that almost everything is kind of expensive, perhaps because of the liquidity that the Fed and others have pumped in the system, and you're getting almost zero putting your money at the bank. So I would, be a little bit cautious. I would diversify. I think there's more value internationally than there is domestically, and it's easy to invest internationally. There are index funds or ETFs you can buy, but definitely, towards the right part of the pendulum, probably on the 4 area, I'd say.
That's great. So now we're going to move into, we've kind of talked about some insights. We're going to try to look at some questions and what would Buffett do? So WWBD, what would Buffett do? So here's an example where if you have, let's say, come across or somehow have 100,000 or 200,000 to invest, what would Buffett suggest? And John, maybe you kind of offer your own insights also.
Yeah, people periodically ask Buffett for advice and they're hoping for a stock pick, and sometimes they walk away disappointed. So the first thing he says is if you have high interest rate credit card debt, you should pay that off. You probably know that most credit cards, not the teaser rates, but the regular rates, are anywhere from the mid to high teens to the low 20%. And the average investor on the street is not going to make 20% per year. So step one, if you have bills that are overdue, you have credit cards where you're only paying the minimum investment, pay that off. Step two, I would say building towards an emergency fund. Here with this whole crazy COVID pandemic, we were kind of thrown into this with very little warning. And I think that one thing that may have relieved the stress of people, even that were unfortunate enough to lose their job, is that if they had an emergency fund put aside, there'd be less panic. So I would say think about getting about 3 months of your living expenses in an emergency fund, something that's safe and liquid, with the ultimate goal of maybe having 1 year of living expenses. That might be hard to do initially, but you might want to work up to that. So, right, given those boxes checked, paying off the high interest rate credit cards, having a little bit of an emergency fund, I think equities are still a good place to be. Now, when the markets are kind of expensive like they are now, I mentioned this term dollar cost averaging. So let's use the example. If I have $100,000, I might put in $10,000 a month for the next 10 months. Therefore, if there's a crash or correction or bear market, however we want to term it, you're kind of buying at the average price and not putting it all in at the peak. So that would be some advice. Obviously, you want to build towards owning your own home, getting a down payment on that. So all the above I would include, but once you have the emergency fund, once you have a down payment towards a home, I think broadly diversified stocks are, I think, a good place to be internationally as well.
How about for different age groups? Does it work the same, or is it different if you're younger
Yeah,
versus older?
I think it's got to be different, and maybe I'll start on if somebody's a bit older and ask Tyler for his views on if somebody's a bit younger. Clearly, somebody that's retired, I think, can less afford to take risk because you are retired. Hopefully, you're enjoying your retirement, and you don't really want to go back to work. So I think somebody that's retired maybe might focus more on dividend-oriented stocks, some corporate bonds. Not a lot, given that interest rates are likely to go up, but you can take less risk. And what do you think, Tyler, in terms of younger people, what their portfolio might want to look like?
Yeah, I would say younger people reasonably would be able to handle stocks that have a higher volatility, like stocks that might have a beta greater than 2, which is like a measurement of that combines correlation and volatility. And yeah, I think they might be more comfortable buying stocks that have more extreme ratios, such as price earnings, if they're able to stomach that type of volatility.
Yeah, just to add on that, so almost over any 10-year period of time, stocks have earned positive returns and substantially outperform bonds. And clearly over any 20-year period of time, it's happened. And not that past is guaranteed to work in the future, but we have really stock market data going back to the 1870s. And as I said, almost if your horizon is more than 10 years, I think having stocks as a healthy portion. As Tyler said, I think if you can stomach some of the volatility, you might want to go towards some of the riskier type investments. And they often fall in technology and other areas. While if you're more closer to retirement, as I mentioned, you might want to own some dividend-oriented stocks. But definitely, I think stocks are a great part of most people's portfolios. And not that Buffett needs the money, but he's 90 and he's still recommending index funds for most people.
That was great. So we're going to do one other, what would Buffett do? And this is for Tyler. So this past week, Fidelity announced that they're going to create an account for teens. So Tyler, what would Buffett say about it, and maybe your take on this?
Well, as for what Buffett would say, I think he would probably be pretty supportive of this idea because he likes to emphasize the idea of the market having compound returns, and having a long time horizon could allow your money to grow exponentially. And I would agree with that perspective. And I feel like this idea from Fidelity would allow younger people to learn by actually making the investments. And I think that's one of the best ways to learn, because experiencing that type of volatility with the market, it's one of the most effective ways to understand the way the market works.
That's great.
By the way, Buffett, he bought his first stock at age 11, so he'd really be a fan of this earlier.
One thing I know, Tyler, you're very focused on financial literacy. What's your advice to parents about approaches to explain to kids, their children, about financial literacy, if you have an insight for them?
Yeah, I guess for parents, something important is before their kids start to invest, it's pretty important for someone to understand the basic economic concepts that drive the market, such as how the supply and demand interact to create an equilibrium price. And it's because these marginal transactions are really what fuel the market as a whole. And as soon as the kid is able to understand those ideas, I think that would be fine for them to start learning how to invest.
Yeah. So I have just one other, in all of Buffett's teachings, if John or Tyler, if you could say, like, what would be one teaching that a parent might share with his kids that you felt, would not be transformative, but be impactful?
You want to start first?
Yeah, I guess. One important teaching would be, I guess, do some research before you actually make the investment. And that's because many of the companies that are popular may seem attractive. If you look, I guess, beneath the surface, some of their prices may seem pretty unreasonable, especially if you check at some important metrics like price to earnings or price to sales or price to book ratios.
Yeah, just to add to that, I mean, we talked about this idea of having the right mindset or temperament. And I think if young people can get accustomed to the fact that the market is volatile and you just got to ride it out, establishing that long-term mindset, I think, will go a long way towards generating the exponential or compound returns that Tyler alluded to, because it's easy, everybody loses money, including Buffett. What you want to have happen is have a young kid lose some money and they get, lose faith in the stock market forever. It's just part of the game and you just got to ride it out. And it's almost like a metaphor for life, having grit and just overcoming some bad times.
That's great. So we're gonna do one other poll, which if you can, in the chat area, just respond to it. We're just trying to get a sense of what people are expecting for the coming year. So historically, and I think John alluded to it, the stock market has returned about 10% a year. What's your estimate, your own estimate about what the stock market return might be over the next 12 months? Less than 10%, in the ballpark of 10%, or more than 10%? So if you could share your responses in the chat.
We're seeing a mix of responses. I don't know if you can see the chat, but nobody can time the market. So I think everybody is right. We're seeing all the above, A, B, and C. If the market's efficient, which means it reflects all information, probably close to the 10%, will be accurate. But there's a lot going on. There's taxes that are going up and a lot of things to consider. But regardless of what the return is going to be, I wouldn't let it shake you out of the market, especially with a long-term financial plan.
What do you think Buffett's thoughts are on the market for this coming year?
Well, it is intriguing that he's holding more than $100 billion in cash. So to me, I think he probably thinks that, at least for the big companies that he likes to invest in, that the market is probably on the expensive side for most stocks. But, he has still added, we see this recent changes that I can chat about. If you look at his changes, so first of all, there's really a lot on the screen, but I'll just kind of add.
So just to tell everybody, this is the section where there's things that have happened this past week. Mm-hmm. Buffett's firm just filed a 13F filing, which shows in the first quarter what his holdings are and what changes in holdings. So we wanted to just have John show what's going on in terms of looking at Buffett in real time.
So I think the two stocks that he added, you see here at the bottom, Kroger and Verizon, are towards the safe part of the spectrum. And, I could feel comfortable kind of investing in that. So if you're not familiar with Kroger, is one of the largest supermarkets in the country. And their PE, which is a metric that Tyler alluded to in valuation, it's about 40% less than the market. Verizon also has a low PE and they pay a 4% dividend. So these two stocks, Kroger and Verizon, might be a place to hide out in the event of market volatility. And just looking at the other things on the list, Apple is now his biggest position, which is kind of a surprise at one point because Buffett usually does not invest in technology stocks, but he came to view Apple as kind of a consumer company similar to a Procter & Gamble or Coca-Cola, where it has steady demand. And many of us have an iPhone and get the latest version when it comes out. But notice these companies, all of these have kind of stood the test of time. I think most of the people on the call here know about Coca-Cola and Kraft Heinz, American Express. Those companies are often over 100 years old. And DaVita is probably the one that's not a household name, but if you know anyone who's doing dialysis treatment, they're one of the leaders of that place, of that healthcare space. And Wells Fargo, I think it speaks to Buffett's character. He owned Wells Fargo for 30 years, but if you follow the story, they got caught up in some sales scandals. And I think just Buffett got tired of it, and he tries to practice what he preaches and being ethical. And I think that's one reason why he sold the stock.
He was ahead of the curves. I think a couple of banks downgraded this past week based on, not on his action, but looking at the property or the company. And then another news event this past week was that Berkshire, and obviously Buffett's firm, is recasting this modular construction. What does this say about his investing?
It's just like so brilliant. It's simple but brilliant. So as you probably know, there's a housing shortage, right? There's housing prices have been going up. There's not enough inventory. So number one, he's meeting this shortage with these modular construction things. You can view it almost as like Legos, where like a room is built and then you snap them together and you have a house. So you can do it quickly and you can do it cheaply. So I think it just speaks to his brilliance in terms of seeing a market need and meeting it quickly.
I totally agree. And then the last example in terms of Buffett in real time is about Bitcoin. And maybe you could speak about its volatility. And obviously he feels it's a mirage. He doesn't feel that it makes sense to invest in these.
Well, it's been incredibly volatile, and it's even down 10% today as we're speaking. And I'll let Tyler kind of share some of his views why Buffett doesn't like it and why Tyler actually has it. So I don't own Bitcoin, but Tyler does, and he's made some pretty good money on it. So maybe just talk about Buffett and Bitcoin and why you got into Bitcoin a little bit.
Yeah, so with Buffett, the reason why he says it's not really a worthwhile investment, and the reason is he prefers to view investments in terms of what he calls intrinsic value, and he thinks of that as a sum of an asset's future cash flows. So, for example, a bond has intrinsic value because it pays interest. Stocks have returns and dividends. And real estate can pay rent, and land can generate something like crops. And in contrast to all of these, Bitcoin doesn't really do any of that. So he says it doesn't have intrinsic value and it's not worthwhile to invest in it. But one of the reasons why I invested a little bit in it is a lot of people see value in the fact that it's a deregulated currency, and that the supply of Bitcoin will ultimately be fixed at a fixed number and won't be subject to inflation that's often occurs with the US dollar, for example.
Yeah, we saw a question in the chat. What is Bitcoin? Bitcoin is a virtual or alternative currency that a group of people, programmers, they're kind of anonymous, we don't know who actually set it up, said, okay, this is kind of a version of digital gold, except there's nothing backing it. There's no central bank. And it has been one of the most volatile, but also hottest investments over the past several years. And even this year with the volatility, it's still up about 200%. So I view it as a risky alternative currency. I do think it's going to be around, but I'd be in kind of the Buffett camp, preferring to own companies that actually generate cash flow. But if you want to do this with the risk part of your portfolio, go ahead, but just be prepared for a bumpy ride.
Yeah, it should be a small part of your portfolio. So we hold on. So we've almost at an hour right now. We wanted to be roughly an hour. If anybody's interested in asking a question, I'm not sure, can they do it on an audio basis? I guess they would just put it in the chat.
I've seen some questions in the chat window. So I see one, what's the best way to invest your time? Yeah, good question. So number one, try to establish what Buffett calls a circle of competence. So I think everybody knows a lot about something, whether it's a personal interest, a hobby, or where you work. And I would encourage you to invest in stocks in that circle of interest. So that'd be one point. The rest of your portfolio, it's fine to do in index funds. An index fund, I mentioned the S&P 500, the most popular one. You're buying a basket of large leading American companies. And for most people, I think investing in index funds is going to be a good way to build wealth over time. So I would take a page out of Buffett's book, kind of do what you love, but live within your means and build up an investment portfolio on the side. If you find, like in my case, you enjoy investing for other people or teaching investing, you can kind of kill two birds with one stone.
That's good. Are there other questions in the chat room, or should we just move to our final?
There are a couple of questions. Does Buffett know about the book? I did send him a copy of the book in draft form, as well as the final draft, and his secretary thanked us for sending the book. There's only one book that he cooperated with called The Snowball, which is his unofficial biography. So I wish he gave a great endorsement, but he's aware of it. I hope he likes it. And hopefully I'll see him at a future event.
That's good. So then maybe we just move. You talked about time. One of the, I think a really fine teaching is like his perspective on time. And maybe John, you could speak to that.
It's really interesting that there are great investors like Warren Buffett, and he's probably one in, if not a billion, one in 10, 20 million. So there is talent out there. But if you look at what typically drives wealth, number one is living within your means, right? We've all heard about famous celebrities, athletes that made millions of dollars and then ultimately wound up bankrupt. So step one, having the mindset where you're not really overspending your income. And two, start early. Whatever age you are now, you can start investing. And you can have the magic of compound interest that Tyler mentioned, exponential growth working in your favor. So those are probably the two most important things. A third thing is that if you enjoy investing, if you're good at it, well, you could probably add further value by picking the right investments, which is not as easy as it looks, but I do think it's possible to outperform.
And then wait, hold on, I'm trying to, and then, I mean, this chart is very interesting, how he really earned most of his money, almost all of it after 90. So it's never over. And really, it just gives you hope that there's always this opportunity.
It's amazing. I think this graph would kind of shock most people. Part of it is the compound interest, and part of it is that he continued to work and helped build up Berkshire. Even now, he's 90 years old, he's still working. And in case you think 90 is kind of old, the vice chairman of Berkshire, his name is Charlie Munger, Buffett's friend, is 97. He's still working. And one of the things I got to do when I was out there, as well as if you attend the annual shareholders meeting, Berkshire owns a company called Nebraska Furniture Mart. And the original founder, her name was Rose Blumkin. She worked until age 104 to drive a little scooter around and still be active selling furniture. So I think that's a powerful takeaway, that if you like what you do, it doesn't really seem like work, and you can keep doing it as long as you're healthy enough to do it.
Yeah, that's great. So I think we really covered everything. I want to thank again the Bookworm for organizing this and sponsoring this event, and Carl for helping to coordinate. And then Carl, if you want to speak again about how people can order the book, that would be great.
Yeah, thank you, John and Tyler, and thank you, Mark, for your thoughtful presentation and great questions. I really appreciate the time that you put into this. Again, I'm going to put the link to the book from our website here in the chat. And if you're interested in a copy or more than one copy, I know that John and Tyler would certainly appreciate the support, as would we as an independent bookstore. Again, our stock of books is at John's house right now. So he's going to sign and personalize those, and Tyler will as well. So there's an order comment line there when you place an order. So just go ahead and put the name you want if you want it personalized. And yeah, we'll go ahead and get those mailed out to you when they get back to our store. So again, thank you guys for being here today. Mark, John, Tyler, thank you for sharing your time with us.
Thanks so much for having us.
Thank you.
Yeah.
Have a great Sunday. Thank you.
Yeah. Everybody have a great rest of your day. And yeah, thanks for being here again. Bye.
Thanks.
Thank you.